Hey guys, Tony here. Everybody losing their damn minds over this article that came out this morning on Reuters, an update from Moodys. Half of Q4 U.S. corporate defaults are repeat offenders, according to Moodys. And it says down in the text of the article that notable defaults in the fourth quarter include AMC Entertainment Holdings, people rushing out videos without bothering to understand or even read the report from Moodys or talk to you about the historical credit ratings of AMC, people posting articles from January 2021 as if it is news today to misinform you what is going on. Let's talk about the facts in this video. I will put a link to this article in the video description, and I also recommend that you go over to moodys.com or ratings.moodys.com and read the full reports yourself if this is an area of interest that you have. And be very careful who you are getting information from on YouTube. There are a lot of YouTubers that do what I call non-DD. Just put out a video because they're mad or upset and they can't be bothered to take the time to give you the real information or even get it for themselves. Now let's be real with ourselves and call it what it is. AMC's credit rating is considered high risk, being a Caa2, but we can see here on Moodys that they have the outlook posted as stable, meaning no anticipated change in the credit rating. And there was an upgrade in the credit rating in February of 2022. You can see that same information here in graphical form when the movie industry collapsed due to COVID in 2020 and AMC got all the credit rating downgrades because of no income. And you can see also towards the right where there was that upgrade in the credit rating in February of 2022. Since then, the credit rating has remained stable. There's been absolutely no change in AMC's credit rating since February 2022. So let's talk about what is this limited default notation that happened earlier in January. Let me explain that to you real quick. When we look at the probability of default chart, you can see here on the far right hand side where it has that Caa2 PD/LD limited default designation, and that actually dropped off a couple days later. You can see on January 9th the LD is no longer there, and then again 25th of January the limited default designation is no longer there. And this is not even the first time that AMC has had the LD designation tagged to it for a couple days. If we go back to the 9th of February 2023, you can see it, and then it drops off a few days later. And same with back in August of 2020, you can see the PD/LD, and it drops off a couple days later. Now let's talk about what it is, why it's there, and why it drops off. In a nutshell, under Moody's definition of default, when a company exchanges debt for shares like AMC did in December of 2023, they consider that a limited default. I will put a link to this PDF in the video description also if you care to read that. This is basically a notation to analysts who might be researching the company. Hey, something happened on this date. You need to go research and find out what it was. And about 3 days later, the credit rating agencies take that notation off. Did Reuters or Yahoo or anybody that put this article out today saying that AMC defaulted back in the fourth quarter of 2023 bother to explain any of that to us? Of course not. No, that'd be too much trouble. It's much easier just to put a headline out that said AMC defaulted in the fourth quarter so that people can make videos and get you all emotional and upset. If you bought AMC stock in late 2020 or early 2021, I think it's safe to say that you knew you were buying a recovery play, a struggling company, a company that is not making money, company that does not have free cash flow. And things have only improved fundamentally since then as the box office grows, but there are still struggles ahead. AMC needs domestic box office of $10.5 to $11 billion due to its size. They need a box office that big to consistently be able to create quarter after quarter of positive income. And we're not quite there yet. So it is good to know what the credit rating is, what the risk of default is, what the probability of bankruptcy is. It's still there. The company still has some recovery to do. The box office has some recovery to do, and maybe we'll get there in 2025. The fact remains that AMC is not really in default of their loans. They haven't missed any loan payments. If Moodys wants to say, okay, we're going to give you a limited default for 3 days because you exchanged some debt for equity, that's just something that you need to understand so you don't get emotional and misled by these non-DD folks out there on YouTube, Reddit, and Twitter. What are some of the good things that Moodys said about AMC in their report? And I want you to go read that entire report. Check the link from Moodys down in the video description. They said that the outlook for the company is stable. They said that Moodys expects AMC will continue to effectively manage operating expenses to maintain EBITDA margins near current levels in the 20 to 25% range. And they said that the liquidity rating reflects adequate liquidity over the next 12 to 18 months because of those cash raises the company just did, supported by sizable unrestricted cash balance, which we anticipate to come in somewhere around the $1 billion mark when AMC reports their fourth quarter earnings here in a few weeks. In the middle of the paragraph, they go on to say Moodys expects the cash burn to moderate somewhat in 2024, which should help maintain cash at high levels. Yes, it was painful to do the ATMs, those at-the-money offerings, but AMC is attempting to fix the balance sheet. They're attempting to fix the credit rating. They're attempting to fix that negative working capital that I've been talking with you guys about for damn near over a year. And you understanding this stuff will help you avoid the emotional tug of war that's going on out there in social media from people who aren't looking at the financial statements, who don't understand what working capital is, or that AMC had at one point almost a negative $1 billion in working capital. That is really, really bad. And they've taken some big steps to fix that over the last year, including these recent ATMs. Yes, they suck, but they are necessary. I want to close out with a post from Markets with May, who says, I personally think it's beyond stupid to think of this as a default because of the following. The remaining bonds are still completely intact, meaning there is no change to what they pay out, and the fact that they are due at par in 2026. There is no bankruptcy event. The company's finances are actually improved, not deteriorated. Because of this, the debt for equity exchange that gave AMC from Moodys the LD designation, and there is no assumption that the remaining bondholders would have to take the same exchangeable payment for their debt ownership. Although Moodys did say that there is the potential for future debt for equity exchanges. We've already talked about that, you and I, and we always know that the risk of another ATM, another dilution looms potentially in the future, and we just don't have any details on that right now. My hope is that AMC feels comfortable with $1 billion in the bank to see them through 2024. I don't think there's much risk, unless another COVID happens, that they're going to burn through $1 billion in 1 year, and then we will wait and see if 2025 brings a bigger box office and does away with that cash burn. I hope that this video was helpful to you in understanding the facts, the realities, the subtext that you don't get from skimming over an article put out there by Reuters. I hope that you continue to work to understand the financial statements, the fundamentals, and yes, even go read the credit rating agency reports. All of that information is vital for you to understand your investment, especially when you're speculating in companies which are not yet generating profits. In terms of how I look at when I talk about generating profits, I mean on an annual basis. When you look at the entire year, did they make money or not? I'm not just looking at 1 quarter, because you can't judge a business on 1 quarter of success. I am Tony Denaro. Thank you for watching. Hit the subscribe button if you are new here. Share the video with a friend. Leave me a comment if you have any questions below. I will see ya on the next video.